Never do these things before buying a home. If you're thinking this is your year to buy a home, if you're starting the mortgage pre-approval process or already have the pre-approval and are ready to take the next step and start looking at homes, these are some things that you definitely do not want to do. My name is Vilija Truelove. I'm a local Durham Region real estate agent. If you're looking to move to or within the Durham Region, feel free to reach out. You can schedule a consultation through my calendar link in the description below, or just send me a text or an email. I'm here to help. And if you haven't already, make sure to hit that subscribe button so that you don't miss any of my future videos. So here are 6 things that you should never, ever do during the time you're actively searching for a home or looking at being approved for a mortgage. Number 1, never change jobs. When you're in the process of buying a home, stability is crucial, especially when it comes to your income. The months leading up to your home purchase are not the best time to switch jobs or start a new career. Even if you get a higher paying job, you may have to wait until you're no longer in a probationary period before you can move ahead with things. Job changes can create lending issues, especially if your pay structure changes, like going from salary to commission. In that case, lenders typically want to see at least 2 years of consistent earnings to be comfortable lending to you. Switching from salary to hourly can also raise red flags because hourly income can fluctuate. So the best move is to avoid job changes before buying your home. If you're thinking of making a switch, just wait until after you've moved in and settled into your new mortgage. Lenders prefer consistency. So if you've been in the same job or industry for a while, that's ideal. If you're changing fields entirely, be prepared to wait before qualifying for a mortgage. Number 2, never finance a car or another big ticket item before closing on your home. When you're buying a home, it's easy to get excited about all the new things you want, furniture, appliances, and more. But here's the thing. Many of these major purchases require credit, and purchasing them before applying for a mortgage can cause some problems. A lot of inquiries on your credit report or a higher debt-to-income ratio can hurt your chances of getting approved. One of the biggest mistakes you can make is financing a car just before applying for a mortgage. A car loan can seriously impact the amount that you qualify for. The same goes for buying another big ticket item like furniture, appliances, or a vacation on credit. These big purchases can trigger a final credit check right before your mortgage closes, which could jeopardize your approval. Not only can it mess with your credit score, but it can also raise your debt-to-income ratio, making you look riskier to lenders. So the best move is to hold off on any major purchases that require using credit until after you finish the mortgage process and settled into your new home. Once you're comfortable with your new payments, then you can consider adding another debt if you feel it's necessary. Number 3, never max out credit card debt. Maxing out a credit card is one of the worst things you can do before closing on a home loan. The additional debt will increase your debt to income ratio, which could reduce the amount of mortgage financing that you qualify for. Plus, it will hurt your credit score, which could end up raising the cost of your loan. When it comes to credit scores, it's not just about the total debt you have, it's about how much you owe relative to your credit limit. For example, if you owe $3,500 on a card with a $4,000 limit, you're considered nearly maxed out, and that can lead to a big drop in your credit score. This could result in higher interest rates and monthly payments on your mortgage. To secure the best possible rate and keep your credit debt in check, try to keep your credit utilization under 30% of your total credit limit. So if your card's limit's $3,000, aim to keep your balance below $900. If possible, pay off your balance in full each month to improve your credit score, lower your debt, and increase your chances of getting a great home loan. Number 4, never have late payments. You should always make your payments on time, whether you're planning on buying a home or not. However, in the months leading up to looking for a home, you want to be especially careful not to be late on car payments, credit cards, or other loans. One of the biggest factors that will affect your credit score is making your payments on time, at least the minimum payment. So even if you can't pay off your credit card in full, at least make the minimum payment on time. Number 5, never agree to co-sign. Your home buying process is not the time to co-sign anything. Some will argue that it's never a good time to co-sign because even though you're not the one making the payments, and no matter how much you trust your beneficiary, co-signing a loan increases your debt to income ratio. In the worst case scenario, a default on the part of the borrower can jeopardize your entire loan process and make you responsible for paying that debt. But even if that doesn't happen, that debt is counted as your debt and will lower the mortgage amount that you could potentially qualify for. Lastly, number 6, never shop for a house without getting pre-approved for a mortgage. Before you start house hunting, getting a mortgage pre-approval is a must. Without it, you could end up disappointed. If you fall in love with a home and then try to get pre-approved, there's a good chance that the house could be sold by the time you finish the process. Plus, many sellers only want to show their homes to serious buyers and can actually ask for a pre-approval letter. But there's another big reason to get pre-approved early. You likely won't even know how much you can actually afford until you go through the process. Getting pre-approved means applying with a lender who will review your income, credit history, down payment, and debt load. Only after verifying all of this information will a lender be able to approve you for a loan and give you a clear idea of your budget. If you're starting to think that a new home is in your future, reach out and we can set up a consultation where I'll explain how the home buying process works, and I'll also answer any questions that you have. Thanks so much for watching.